In this video, we're going to create a vendor bill and a vendor credit memo. Go to Expenses and Bills. And from there, Add Bill, Create Bill. And then we'll choose the vendor. And then we'll have the bill date, due date. We'll just put this as March 2nd. Bill number 100. Category, this is the account, expense account that we're putting the bill under. And that will be supplies. Description, we're buying keyboards. And that'll be at $150. Okay, so this is our bill that we created. We can go ahead and save this. And then now we'll go ahead and look at the transaction of the bill. This is the debit and credit of the transaction. So this will be through the transaction journal. We can see the debit and credit of a transaction. So we see the accounts payable is increased with a credit and the supplies expensed with a debit. And that makes up the transaction for the bill. So now let's go ahead and create a vendor credit. So basically, if we receive a credit memo from the vendor, or if we internally create a debit memo to reduce their payable account. This brings up the vendor credit screen. I'll put in the same vendor. Computers by Jenny. Reference number. Got the payment date, February 26th. And we'll just put in the reference number as a credit memo that the vendor provided. If we have a debit memo, we could just put like a DM1, CM1 for credit memo. And we could scroll down to the same expense account. We're using the supplies, so we'll make sure we use the same account that we had the bill applied to. Description, keyboards returned, and we're going to have a $30 credit. So it's a positive $30 amount we're putting into the credit amount field. Go ahead and save and close. All right, there's our transaction journal for the bill. Now we're going to go ahead and look at the transaction journal for the credit. First, we'll go to vendors. And let's take a look at our vendor. Computers by Jenny, the open balance is $120. That's the net amount of the $150 bill minus $30 for the credit. So basically it'd be $120 that we owe the vendor. And there's the vendor credit screen. Let's look at the transaction behind the scenes of what this looks like. So the debit and credit through the transaction journal, we could see for the vendor credit. And as soon as this appears, we can see the accounts payable is debited. In other words, we're reducing the accounts payable. And we're crediting supplies or reducing supplies with the credit. So basically, we're debiting, if we get a debit memo, we're debiting the accounts payable, the customer's accounts payable account. That's if we issue a debit memo internally. If the vendor gives us a credit memo, they're reducing their receivables, crediting their receivables. That's what that means as far as credit memos and debit memos. And it allows us to reduce their payable account, the credit memo. So now if we look at the computers by Jenny, pay bills, bill number 100, open balance of 150. Now if we look at the credit applied, we have an available credit of $30. So we can use $30 towards this payment as a credit to reduce the 150. The payment automatically shows us 120 because 150 minus 30. Total amount, 120 plus the 30 is 150. And we'll go ahead and save this. But the payment will be 120. And we're paying out of the checking account with the pay bills. The payment date of February 22nd or 26th. We have it to print later. Let's close this. So now if we go to reports, and we'll look at the vendor report for the bills and applied payments. So this is the bills and applied payments report. This will show us the bill amount plus the credit. So we scroll down to our vendor. Oops, there's computers by Jenny. So we have the bill payment check is 120. And the bill number 100 is 150 with a credit memo of negative 30. So it shows it there, the net amount and the bill payment. And that's vendor credits with an invoice.